Well, the market's been wavering a bit, and a few comments from heavyweights both here and overseas aren't helping. I spoke to market analyst Roger Montgomery earlier. Roger, a bit ironic, first of all, that Mike Smith, the head of ANZ at the ASIC forum yesterday, was warning about investors not understanding risk.
Well, we've talked about that here for quite some time, and the reality is that we've got asset prices very, very high, which translates to low expected returns, and I don't think people have really thought about the consequences of interest rates rising or liquidity declining. If either of those two things happens, then people are going to find that attractive dividend yield that they've been chasing is not going to compensate them for the risk of capital loss.
Because you think of this yield as being something from any of the big blue chips, the big banks or Telstra, as being something that has almost been promised now. The expectations are such, aren't they?
That's right, but you only need a 4% decline in the share price, which can happen in a day, and you've wiped out that yield, forgetting about, of course, just the difference between the yield on cash and the yield on shares.
Yeah. Look, overseas and from the US, mixed signals from two governors of the board of the Federal Reserve. We've got the Reserve Bank of San Francisco President John Williams. He's bullish about the US economy. By mid-year, he says it'll be time to have a discussion about starting to raise rates. But Fed Vice Chairman Stanley Fischer said could be rising by the end of the year, but no plans for further hikes. There's very mixed messages coming, aren't there?
For what it's worth, we think that stagnation is a bigger risk than inflation, and
in the US economy.
In the US economy, and that's because the rest of the world isn't growing, and it's very, very hard for them to sustain above average rates of growth when their customers and their suppliers aren't growing very strongly. And so we're seeing China slow down materially. The quantitative easing that we're seeing in Europe is because things aren't well over there. Japan's struggling to get its head above water, and Australia's slowing down as well. I can't imagine the United States growing at a significant rate above trend when the rest of the world is slowing down. So there's a real risk of surprise to the downside, and I don't think the markets have factored in that risk, the risk that really the Federal Reserve won't have any more bullets in its gun, so to speak, if there's a turn down in the economy. They can't lower rates anymore.
Now, just in terms of cranking up growth here in Australia, obviously economic reform is very important, and penalty rates. We've had this announcement on penalty rates today that Saturday penalty rates will be abolished and Sunday rates halved in South Australia, and a union has described this as a win for employers and workers.
Well, anyone running small business in Australia or even medium-sized business knows that we need to be dragged into the 21st century, and finally it looks like there's a state that is coming into the 21st century. Shopping habits have changed, the way people treat their weekends has changed, and if there's a group of people who want a job at a normal rate, not triple the base rate, to work on a Sunday, well, business should be entitled to employ those people. I've spoken to restaurant owners who are paying dishwashers up to $90 an hour to work on a holiday, on a public holiday. And that's crazy. So those restaurants are closed during the week because they just don't make enough money. And that's not good for our state, it's not good for our country, it's not good for tourism. So I'm delighted to see it changing.
Briefly, just back on the TPG story that we've been covering this week, you called it, I think, a cheeky price for IINet.
Yes.
We've got all these problems with a major shareholder, Mr. Malone, getting very upset about this idea of being taken over. Yeah,
look, I think it's right. Let me just say this. I think it's right for shareholders to have a say in whether or not they want to sell their business. The board represents shareholders, so it's absolutely fine, the comments that he's making.
Roger, thank you very much for joining us.
It's a pleasure.